Hi, everybody. Welcome back. Welcome back from spring break. It's weird. We're still at home, but we're still in class and we're still connected. So I'm looking forward to seeing all of you on a video sometime soon. So we'll talk about that in a little while. I wanted to let you know. So day one, and this has changed a little bit, right? Remote learning now, and they're calling it something different. And it is a little different because we're only going to be meeting technically maybe twice a week, depending on if it's a 4-day week or a 5-day week. But so a lot of you have looked at this already, obviously, because you've logged in and you're looking at this video. It's called remote learning, and I will continually update this, but we will only be meeting every other day. Okay, so you only have to sign in attendance every other day as well with me. So if you are on in an A class, like periods 1 through 4, that you have to sign in with those teachers, periods 1 through 4, on an A learning day. On a B learning day, periods 5 through 8, you will sign in your attendance form provided by your teachers on that day as well. So I just wanted to touch base with you because for some of you, this might be the first thing you're looking at, kicking off round 2 of this stay-at-home learning. So I just wanted to bring that to your attention, okay? Over break, Evan created some fantastic videos, screencastifys, and I just wanted to bring that to your attention as well. So let's scroll down here. And right here, I actually put them all on one page, all the way down at the bottom right here. But I separated his out for just the Work Together one as well. So that's included in our learning for today. Okay, so I just want to bring that to your attention. He did a fantastic job. I just want to go over a couple things with you regarding this chapter. Okay. So this chapter is called tangible assets, and actually intangible assets as well. But we're going to be for our work Together one is going to be just dealing with tangible assets, meaning something you can touch. And Evan explained that in his video really well. So we're going to be looking at plant assets as an investment for a business. So a business is going to buy something in order to create revenue, right? So a business won't buy something if it doesn't think it has an ROI or a return on investment, okay? But as you know, not everything lasts forever. So things slowly depreciate for several reasons. They just wear out, or the technology gets outdated. There's lots of reasons why things depreciate, but they always do. We always have to buy new things. So we're going to be looking at some of that as well. So, so this is the recording and the buying of a plant asset. So when you buy something, of course, that right here, the account title is going to show what the asset name is and the value of it and what you actually purchased it for. That is considered the value of the equipment, okay? So cash is going to go down, store equipment's going to go up because it's an asset, and cash is obviously going to go down on the credit side. Okay, so we'll be looking at those, and Evan actually took you through that pretty well on the other video. So I'll just review this real quick with you. This is your Work Together, so you can do this on your own. Store equipment was bought, office equipment was purchased, and so we increased the store equipment and office equipment respectively by the price that we paid for it, $800 and $500. Okay. The next transaction is property tax expense. So if your parents own a home, they actually pay property tax on that. They probably pay it every 6 months, or it could be escrowed into their mortgage payment. Either way, you're paying property tax, and a lot of it goes to support the schools, and there's other local taxes that it goes to support. But in the book, there's land land and property that's valued at $200,000, and there's a 2% property tax attached to that. So the assessed value is 200, and we multiply it by 2%, and that's when we get our $4,000 per year that we have to pay for. And I guess this is due at the end of February, it looks like. So, all right. So the next part, or the very last part of Work Together 1, has to do with buying things in a bundle. Okay. So this is just a new slide that I made to help us go through this work together. So the company is considering buying a filing cabinet and a paper cutter. Okay. So I just, I found my Google images and I put them on here. So if they purchased the cabinet separate, it would have been $300. And if they went in the next day and purchased the printer, it would have been $450. However, the vendor is giving them a deal. So the vendor is saying, okay, if we can sell you both at the same time, we'll only charge you $600. And that's pretty cool because you're going to save a lot of money. However, the problem comes with, how do you journalize this, right? I mean, it's $300. So I've got a cabinet worth $300, but I didn't pay $300. And I've got a paper cutter worth $450, but I didn't pay $450. So how do you figure that out? Okay, so this is what you do. So them together is 600, right? Okay, so you want to take what the value is for each of them and add them together. That is step number 1. So $300 plus the $450 is $750. Okay, so the total value of new equipment actually is $750. However, you cannot journalize that. Okay, you have to journalize it for the price you paid. So to get that prorated price, so to speak, you take the $300, and so that's the value of the cabinet, and you divide it by the whole value, and then you get 40%. So the cabinet, in a sense, is 40% of this whole purchase. Okay, so if the cabinet and the paper cutter are 100% altogether, the cabinet is worth a little less than half of what the printer's worth. So we're going to assess that value at 40% of the total cost that we actually paid. So we take that $600 and we multiply it by 40%, and then we get our value that we could actually journalize. $240 is going to be journalized for the cost of the cabinet. Okay, so I call that the origination value of the cabinet. The paper cutter, you do the same thing. You do one or two ways. You can do 60% times the 600, and that's going to give you $360. Or you could just take the 600 and subtract out the 240 and get the 360. But that's the value of the paper cutter. Okay, so let's go to the demo. And I'm going to turn my light here. Okay, and let's take a look at what the book says. So it's on July 1st or July 2nd. Gosh, I miss doing this in class. July 2nd, we paid cash for a filing cabinet. Okay, so this is exactly what I just told you, what I just explained. This is the same thing. So the filing cabinet is not, the account title is not filing cabinet. It's, what is it? Office equipment. Okay, so we're going to call it office equipment. And then that is, the check number was C331. Okay. And so we're just going to, let's go back to here. And this is our calculation for how we get the percentage. Okay. So we're actually going to journalize that. So it's going to be, we're going to start it with an equal sign, and we're going to multiply the $600, which is what we paid, times the 40%, because the office equipment is worth 40% of the entire purchase price. Okay. The second part is considered store equipment, the paper cutter. Okay. Again, if you had your own business, you can name this whatever you want. So the store equipment, we could do one of two things. We could do the subtraction thing, or we could multiply the $600 times 60% or 0.6. Either one's fine. Okay. And then we get 360, and then the cash going out the door for this bundle pack is going to be the sum of them both. And that's how we get $600 cash going out the door. Okay. So the last part of this is, and if you look in the Evans video, he has actually the key in front of him when he's explaining it, so you can check your work. But the general ledger is where you're going to be posting all of these things. So the office equipment, that's going to be posted as a debit right here. So you would just cell reference equals the $500. There you go. As a debit, and then you would increase the value of office equipment by adding these up. Okay, so you would just post everything that you did up here into the general ledger accounts. Okay, and again, Evan will have that up for you if you watch his video. All right, and I think that's it. That's all we're going to do today. I would like you to read the chapter 19, just the section 1. I would like you to fill out this work together and then check your work. And then on Thursday, we'll move on to section 2. So if you want to get ahead a little bit, you could do that by reading section 2. And I'll have another video up for you. Or you can take a look at Evans if you want to get ahead. All right. Thanks, everybody, and hope to see you soon.